This is Alan Bush with ADMIS with the Daily Financial Forecast for Thursday, February 11th. In the stock index futures, we did see some severe pressure in the overnight trade. This linked to a combination of factors. We had crude oil under pressure again. We also have these geopolitical events that are ongoing, including the worries about the European banking system. We also have geopolitical tensions in the Korean area with South Korea, North Korea at odds most recently. However, we have seen somewhat of a recovery now, this after some OPEC members suggesting that it would be advisable if OPEC were to establish some type of production freeze. So that helped the energy markets to firm up a little bit, and in turn, stock index futures came off of its earlier lows. We do feel that once these geopolitical problems are either resolved or relegated to the back burner, that ultimately it's the low interest rate environment that will take over. But until we see less geopolitical negatives and a stabilized oil market, the stock market futures will probably remain rather questionable. But overall, it's the interest rate influence that dominates, and I think ultimately that will be what saves this market for the stock indices. Now, moving over to the currencies, seeing the dollar index under a little pressure. This due to ideas that the Fed may not be in a position to raise interest rates anytime this year. With that being said, though, the Fed is still the most hawkish of all of the major central banks, even though they are quite a bit less hawkish than they had been. In fact, it was just yesterday that Fed Chair Yellen indicating that the pace of rate increases from the Fed is likely to be slowed. And of course, we have further testimony today from the Fed Chair to the Senate Banking Committee. Also, we are seeing the yen advancing to a 15-month high. This has tensions with the Koreas escalating to some degree. So good gains coming into the yen. However, the yen backing off of its highs as a monetary official in Japan threatening the possibility that there could be some type of intervention. These were very vague, but that was enough to take the yen at least off of the extreme highs that it had made in the overnight trade. Now, moving over to the interest rate futures markets. Strong gains, especially at the long end of the curve. There is now, according to the financial futures markets, a very diminished chance that the Fed will be raising rates anytime this year. In fact, now, as of today, there seems to be a more likely chance that the Fed will be actually cutting rates this year than raising rates, and this is according to the financial futures markets, and that is for the entire year. So this is a very dramatic turn of events. Yesterday, the probability of a rate increase was still intact, although it was much lessened. Now, these numbers are suggesting that there is, believe it or not, more of a chance of a rate cut this year than an actual rate increase from the Fed. So, good trading, everyone. And once again, remember, these are my opinions alone and are not the opinions of ADMIS or Archer Daniels Midland.